Hello everyone, this is Dan Hussey with RJO Futures, bringing you our strategy of the week update for the Japanese yen futures. I've got a 4-hour or 240-minute chart up here of the March Japanese yen 2017 futures. Last week we were looking at the 88.27 low to low extension short. This area offered resistance into the market. We found initial resistance off this 88 or the 8640, area. It was also, if you remember, equal legs up. So you had that double confluence of fibs into the 8640 area. You had both 100% line and 50% lines. I urge you to go back and watch that video if you haven't seen it already, because you can see the setup develop in real time. An 8642 resistance zone forms. The market moves off of the 50 and 100% lines back towards the 38.2, 76.8 lines, which you can use to actually get free in a trade like this. And by utilizing this risk-reward ratio, 1-to-1 risk-reward ratio between what would be invalidation zones up at the 61.8 and 123.6 line, and the 38.2 and 76.8 lines, which represent a first target, or the first downside objective, and confirmation that a corrective structure that began has now ended and is now beginning to reverse. Sure enough, after last week's video, we did get this nice decline in the yen. It tested prior lows, got a reaction off those lows. There was enough of a bid and support still into the 84.60 area for the market to rally and actually take us back up and just tag right above the break here, a break in the 61.8 line. So it came up and invalidated the original setup that maybe could have continued this trend lower in the near term. Now this is the 4-hour near term. There are definitely resistance levels above us that we can take a look at and find for if we do head higher. But as of right now, after a break, we would expect to and probably look for, at the very least, while I still see this as a very corrective structure, and actually if you were to measure equal legs off the lows, we traded up into the equal legs, right, of some kind of flat structure there. But needless to say, with the new low made, it was a new low in the futures, but in the cash there wasn't. Regardless, if you start projecting 3 legs to the upside, you end up with the 87, 80, 100% equal legs of the rally from the 84.60 lows to 87.12 highs, then projected off of the lows here from the 85.28. So an equal legs structure to the upside. Now, if we take a step back and we start looking at other lows to lows, because there's actually a number of levels that can hold. For example, there's a low to low here drawn from this 91.62 anchor to low. This is one of the original extensions that actually held, and the one that we believed was breaking out last week. In other words, the new low to low from the old setup. We were looking for that to continue the market lower. It got a reaction, but it didn't go to target. So there's a high probability that this original extension might now trade or extended short from a new low, or the same anchor to new lows. And as you can see, that actually puts you with a resistance level into a 50% line that aligns rather nicely with that 100% extension. So both that 50% line now at the 88.13s could see resistance up into that area, or the 87.79 area. Now, I do want to point out that even though we broke this new potential extension, we broke the 628 line, we also happen to break the long. So technically speaking, we did just produce what I refer to as a no trend, no trade scenario. Until proven wrong, we're going to be expecting some kind of range to form here, because what we just witnessed in the market was a break in a potential downside setup, followed by, instead of a reversal, an additional break. So we expect, I actually then, in situations like this, I actually look for sideways price action inside of a range between the prior lows and, in this case, these new highs. And holding inside of this range and actually making another leg down to test, the low end of the range, and then after finding support there is where you kind of confirm there's a range anyway, right? Because now you're working on over, your fourth leg or the fourth move inside of it. But with that being said, because of that double break scenario, because there isn't a clear fib or a clear pattern to the direction of the market yet. If this market were reversing, we would expect longs to come in or buyers to come in and buy that 50% pullback and take the market and reverse it higher. That's not what we're seeing. We actually saw the market break below that 50% level in this move down. And we did break the short, invalidated the short, then we invalidated the long, and there's a higher probability now of sideways price action between the 87s and the 85s. So even though at the end of the day, the prior call, while it got free and got a reaction off the area, it didn't go to its technical downside target, and now we're sitting with a scenario of potentially sideways price action as the market is effectively testing prior lows, broken support as resistance, and finds its way sideways. So with that being said, watch out for the yen to be a little choppy, a little sideways, maybe even still be in a larger three-wave corrective structure. But ideally, if things are starting to shift a little bit here, we're seeing profit taking off the trends that we saw go into the end of the year, into the start of 2017, and they've been pretty forceful right out the gates this year. So with that being said, I'll be back with you as price action develops. Take care.